Well, good morning, everyone. Thank you for joining. Sorry I can't be there with you, but well, technology makes things easier these days. All right, so interesting year ahead as we look at what happened in 25. We'll look at how that's going to impact 26. I'm going to share with you several things around what's going on across all of retail, and then I'll even zero in on a couple of, just because time doesn't permit, we can't get into every category within the accessory market. But keep in mind, Sarah Block is there. Sarah, raise your hand, wave somewhere. There you are. Okay. Sarah's there. So if there's any follow-up that you guys would like to see or learn more about some of the specifics within your area of some of the things that we are sharing today, please reach out to Sarah and she'll be happy to help navigate that. So I'm going to kind of start at the end and I want to talk about what's going on as we navigate into 26 with the consumer. And we clearly saw this happen for holiday. Discovery is absolutely top of mind for them. We kept hearing about record numbers of people shopping, but they were shopping to try to figure out what to get. It was not all that much, wasn't that easy for people to figure out what to get that they haven't given over the course of the years. And I'll get into more about that in a minute. So discovery became paramount. Certainly, lifestyle continues. We saw certain things emerge and elevate during COVID. They remained and even now more entrenched. There are things such as health and wellness, athletic activity, certainly different lifestyles. Cooking is another great example of these lifestyles that emerged and have just remained in our lives. Value centricity, I remind everybody, I've said this now for 20 years. Value is not lowest price. That's cheap or that's discounted, or you can use whatever word you want for that. Value is the best bang for the buck. That's what consumers consider value today. And we'll give you some examples in a few minutes on how that's played out as far as pricing goes. And then the other big one that we've really got to keep an eye on is the ability to recognize the importance that social commerce has and being top of not only mind with the consumer, but top of search with the consumer. And with the continuation of agentic AI, we're clearly going to have to figure out how to navigate our way to the top of the recommended list, not somewhere deep down in the bottom. So there's all kinds of things there. And accessories is one of the absolute leads in utilizing social commerce and AI agentic selling. And I'll show you some numbers on that in a second. So I'm not going to go through all these, but there are things that are happening that we need to recognize that are going on. I already mentioned the AI piece. GLP-1 entering phase two. Doesn't sound like something that you would be most concerned about. However, you do need to be concerned about it as it enters into phase two. Phase two is what I am referring to now, the fact that we have it in pill form and that there are brands that are selling these products to almost anyone now who wants it. You can go online, speak to, I guess they're reputable doctors. I don't know if they really are. You can speak to a doctor. They'll give you a prescription for some of these generic versions of some of these products. Again, more affordable pill form, much easier and accessible. The reason I bring this up is it's not that you're in the competition with the pharmaceutical business, but the secondary purchases that come out of that, the accessory items, the wardrobes that get built from this. There's so many businesses that are tagging on to growth because of this movement towards this lifestyle. So start to think about how to do that, tap into that. My favorite example is fitness trackers. 5 years ago, fitness trackers basically almost disappeared off the market. And now they're back hot and as big as ever again. So this is something that is a secondary purchase to the GLP-1 movement. But boy, oh boy, is it created that. Hydration, protein, there's all kinds of things that are just kicking into gear and only going to get bigger. Another big one to talk about is literally how the consumer has shifted their spending patterns. And I'll get into some detail on the bifurcation of the consumer. There are some headwinds that we've got to be concerned about the job market. But a lot of the adjustment to the job market, I've been speaking with a lot of the retailers, and they talk about they're adjusting because they didn't adjust post-COVID until just now, meaning, it was hard to get people to, come to work during COVID and in the short term after, and they haven't really necessarily made all of those adjustments based on that. So now they're starting to do that. So it isn't just that business is bad, because it isn't, but it's because they're finally recognizing they've got to start to get back into, keeping the right staff levels and employment levels. The other big conversation, which is going to come up soon, which will be, is the tax breaks. I'll share some numbers with you that we just got on that, and I'll show you the timing of that. All right, so let's get into some of the numbers and see how business really fared. Some people sit there and said 2025 was a tough year. Some said it was a banner year. Well, what really did happen? On the top line, that's the food industry. Food actually, because of price increases, average price of food increased 3% across all different categories of food. And the growth rate in dollars was surprisingly 3%. We bought the same amount of food. We just had to pay more, so we spent more. CPG, similar story. A little bit slight down use of product, but prices were up 2%, growth was 2%. When we look at general merchandise, we actually grew 0.5%. We did have a decrease in unit consumption, so demand was down. The point I want to make about general merchandise, which is where all of our products lie, is if we took out the launch of Nintendo 2 Switch, the video game, we would have not had growth. I'm going to say that again. If we took out the video game sales of the Nintendo 2 Switch launch, we wouldn't have had growth. And if you look at the bottom line, you see the peaks were slightly off from where they were in the previous year. So pink represents 25, purple represents 24. So you can see we barely made Black Friday. We didn't make big Christmas peak. July 4th promotion, I shouldn't say July 4th, but July discount promotion fell a little bit short of where it was, and some of the other holidays. So peak holidays are becoming very important because you can see they really are creating some big sale opportunities. We'll talk more about that later. All right, digging in a little bit deeper, take a look at what's happening in relationship to handbags and how handbags grew 2% again to an $8 billion business for 25. So we've consistently grown 2% over the last couple of years, and units gained slightly. So handbags actually outperformed what would be considered a flat market. When we look at what went on in the footwear side of the equation, footwear dollars were flat for 25. There's that purple line there. All right, you can see how level that was. Units slid back 2%. So we had an elevated price of footwear. We were selling it at a little bit higher price, a little less promotional oriented. But look at the trend line. We need to keep an eye on this momentum as things are starting to slow down in demand. And, if we didn't have that price increase, we wouldn't have had that flat dollar spent. Okay, look at January to date so far. January is an interesting comparison because last year we had huge snowstorms early in the year, and this year we had those huge snowstorms towards the latter part of January. So you would think they would kind of balance each other off, and fairly close to that. But what you're seeing is an accelerated spend this year in food and beverage because of the storm. People went out and actually had to stock up. The length of the storm and the depth of the storm was bigger than what it was last year. So that's why you're seeing the bigger spend there. And when we spend more on food, it erodes our spending power to be able to spend on discretionaries like general merchandise. So that's why you're seeing some of the pullback. We had to spend more, and we also had less good, clear, nice shopping days. We were kind of stuck at home or busy digging out for a few days. So that makes a big difference, particularly in a soft month like January. So January is off to an okay start. We'll call it an okay. When we look at the momentum what you're looking at here, the purple bars represent a full year. The pink bars represent a quarter, the last quarter, and the orange bars represent a month. Now, a month does not a trend make, but it does give us a good indication of where some of the momentum is. So when you look at general merchandise, for example, on the bottom there, you're looking at demand of product, units selling. And you can see that the actual period of January, the demand for product was better than what it was for the quarter. So we're getting a little bit of bounce back in momentum. And there's that food and beverage elevation. And even large chain restaurants started to get a little bit better. When we look at all of the different industries, here's why. Remember before I said if you took out Nintendo Switch, you wouldn't have had growth? Well, look how big the growth was in video games. Up 7% in dollars, but yet down in 7% in units. So they didn't sell more product, but they sold more higher priced new launch product. And the average selling price was elevated a whopping 14%. So that's the big story in why general merchandise was able to maintain its level of sales. Going across the board, now this is the full year in review. Going across the board, toys did well in the very end of the year and had some slight price increases. But I want you to pay attention to the bottom line, and we'll take a look at accessories, which is the fourth from the end on the right. Take a look at the bottom line. That's average selling price. You'll notice that there isn't that exorbitant level of increase in price as much as one would have thought with all of the discussion about tariffs throughout the year. The exception to that is video games and small appliances. And when you look at what happened with small appliances, I'll show you some numbers in a few minutes. They took price very late in the season. They front loaded. So they were able to bring in pre-tariff priced product, and they only had to take price towards the end. And it definitely hurt their business as the year progressed. Accessories, well, you can see down 3, average price, down 3, unit selling was flat. That just shows us that demand wasn't there for product. And I'll explain why that happened in a few minutes. All right. Again, I'm not going to go through all these, but you get the idea of what's happening. Relatively benign market in the sense that we've got where one goes up, the other has to kind of come down. When we look at the full year versus the quarter versus the month, again, purple, pink, and orange, across the different industries, you'll begin to notice some patterns emerging. Look at apparel in the middle, and obviously accessories and apparel are kind of attached at the hip, so we need to watch what's going on. Apparel took a very hard hit in the short end of the year. So when we look at January, apparel didn't fare well. Now, normally you get decent activity in apparel in the new year because people start to think about New Year's resolutions, and active apparel drives a lot of growth. Didn't happen this year, but this has a lot to do with weather and a lot to do with the absence of product, which I'll talk about in a short bit. When you look at where accessories lies, just go a couple over, again, fourth from the right, and you see the year was not great, but the quarter wasn't bad, and the month wasn't bad either, considering. All right. Now, remember, during the months of December and January, we do an awful lot of cold weather accessories. We would have looked for this number to elevate a little bit more than it did. Now, when you look at inventory levels in stores, there's not enough cold weather accessories in there simply because we front load so much. And we've talked over the years, Karen's probably tired of hearing me say, we live in a buy now, wear now mindset mentality, and we've got to get the merchandise calendar to get more in sync with the consumer calendar. Consumers buy in season. Retailers buy preseason. We've got to get more inventory for the consumer when they're ready to buy it, when they need it. So we've got to work harder at doing that. When we look at the footwear side of the equation, take a look at where the activity is coming from. In women's footwear, it's about casual fashion. On the right-hand side, it's about performance for men's. All right, that's where the growth tracks are coming from. Let's talk about income. I mentioned earlier the shift and bifurcation of what's going on with the demographics and the income of the consumer. You've heard a lot about this, what's called the K curve, right? There's the K when the upper income or one of the incomes goes way up and the other goes down. What you're seeing here is a pattern that's really, been around since pre-COVID, and that was the upper income driving the majority of the growth. The lower income, when it comes to general merchandise, has been starting to wane as early as November and took a huge dip in January. Now, a lot of that has to do with the end of the ability to not have to pay back school loans. The lower income took a big hit when they started to have to pay back on average $550 a month in school loans for a lot of that income level. Additional things contributed to that: less stimulus money or less SNAP benefits, which are supplemental nutritional programs that offer, it's basically a new way of calling them food stamps, so that they lost different components of their supplemented income. But here's what I'm really watching. This has been a pattern of, normality for years. This is not the first time we've seen this. But what I'm watching with laser focus is that middle income consumer. If we lose the middle income consumer and they start to continue to wane, you now have two out of the three sectors dropping off. That is going to create a challenged environment. So we've got to keep an eye on this. Stay tuned, keep your eye on how we report this out. And really very important piece. When you look across the food side and the CPG side, the story doesn't vacillate much. That's where your priority of spending comes in. We buy food first. We buy discretionary items second. So you're not seeing that big of a difference, but you are starting to see that lower income, which was leading during a period during this year in 25, drop off a little bit as well. So this is a very important thing to recognize how it's going to navigate out. This is looking at inflation. What you're looking at here, orange line represents wage growth since 2019. So if the average is about 3%, that's the same for all these different quadrants here: merchandise, food and beverage, CPG, and quick serve restaurant. That's what QSR is. So wage growth is the same in all of them because that's the same number, running at an average of 3%. The pink line represents average selling price. So if prices are at the same rate that wages, those lines would run simultaneously. So you can see general merchandise is running on average about the same as what wage increase is. So we're not seeing huge inflation in general merchandise, but we are seeing huge inflation in food and beverage and CPG and even in value-oriented quick serve restaurant meals. The purple line represents unit demand. So you see that with the wage increase, with the average selling price elevation over wages, the units have flattened off. So the more we have to spend, the less we're going to buy. And the recipient of this challenge is general merchandise. All right. So this gives you a feel of just how impactful each of these are on our business. Talking about the tax breaks, the big beautiful bill that was introduced at the beginning of the year brought the opportunity for consumers to get some tax concessions. And the question I keep getting is, how big is it? When is it going to, kick into gear? And how are they going to spend that money? Well, two things are very important. One, the difference between this tax benefit and the stimulus money that we got during COVID, or I shouldn't say we, some people got during COVID, were that you physically got a check during the stimulus money. So it was like found money. This is a tax break. So if you're getting a refund, your refund might be a little bigger. If you're paying an additional money, your money may be a little bit less. So you're going to have money in your pocket, but you're not getting a physical check like you got, with those four distributions that they did during COVID. So a lot of people like to compare this to COVID. It's not the same. It's also not even sizably the same. So how big is the average refund going to be? Or I should say, tax benefit? Out of the 112 million households, 9 million are expected to get this benefit of an additional refund, a bump. All right. And you can see how it's distributed out amongst the different incomes on the left-hand side. So there's the 9 million. The average bump is going to be $1,000. There's the 90 million of injected opportunity for the consumer to feel wealthier. That's where they all come up with that. Oh, we're going to come up with a $90 million injection. Well, okay, that's what that is. Let's look at the timing of it. The majority of it is going to come in the months of February, March, and April, with the lion's share in March, when people file and get their refunds or file and don't have to pay as much. The numbers to the right show you by different income levels and different age sectors about what's happening in relationship there. But I want to share with you, what do they really expect to do with this number? 72% of the people said they plan on saving or investing it. And 28%, roughly 28% said they plan on spending it or doing something else with it, right? So of those that said they were going to save, paying off debt and saving it were the two biggest contributors. And those that said they were going to spend it basically said they were going to use it to spend everyday essentials like groceries. And 11% said they were going to treat themselves. Okay, I went through a rough year, made less money. I'm going to go out and splurge and spend it. Okay. So that's the tax benefit discussion. When we look at how the channels of distribution are doing in relationship to the marketplace, no surprise, e-commerce is driving some growth, and the club stores are driving growth. Not all club stores, two out of the cluster of club stores are really growing. But when we discuss pure play e-commerce, that's really being driven by social commerce and direct to consumer. All right. So third party and social commerce are what's driving this. This is not your traditional platform like we've been seeing in years past. So this is the transformation that's happening at the digital level. When you look at what's happening in handbags, for example, take a look at where the growth is coming from there, and you begin to sit there and see just how things are shaping up. All right. When we navigate our way through, we begin to sit there and see that the market is really manufacturer owned, direct to consumer is what's driving the growth there. Oops, I lost my screen. You guys can still see it, I hope.
Yes.
Ooh. Okay, got it back. All right, so let's move forward and take a look at this. This is looking at, for the first half of the year, we update this twice a year, so we'll update this probably in a couple of weeks. But this is looking at the brands that got the greatest level of dollar growth. And we broke these down into the sizes of different volumes. So greater than 550 million volume, 100 to 550, and less than 100 million. So big, medium, and small companies. And we did it in general merchandise, food and beverage, and CPG. Just let's focus on general merchandise for a second. There are themes that have emerged from this. Number one theme, health and wellness throughout all three. There is a movement towards innovation. The Nintendo 2 Switch that I talked about, Ray-Ban with the glasses, right? You've got Ninja with the ice shaver, ice cream maker. You've got carbonated beverage in here. That's where Poppy comes from, Dr. Pepper comes from. You've got hydration, which is GLP-1 related, protein, which is GLP-1 related. That's like Chomps, which is a beef stick. You've got, I mentioned health and wellness. You've got beauty products on here. And the other overarching theme is social media, digital dialogue. Many of these brands have gained so much traction and momentum because even though they're small brands or upstart brands, they have just as much marketing power in today's world via social commerce that some of the behemoth brands have. So, very important to recognize that some of these businesses have tapped into one of the greatest marketing tools of today. When we look at social commerce for the accessory side of the business, all right, take a look at what's happening here when we talk about social commerce shopping. This is, and the number on the bottom is women's handbags. Okay, take a look at what's going on. Social media is the place that they're finding discoveries of fashion and trends. Friends and family is now number two. It used to be that they went to stores. That was the first answer. They're now getting it through social media. When you look at what's going on in the size of the women's handbag business, look at how big that's gotten just from TikTok shop selling. And when you look at what some of the numbers are, 52% of the women aged 18 to 34 are seeing it on social media. All right. And you get, I mean, look at the size of these numbers. These are huge impacts in what's going on in relationship to that. 62% said that they purchased a handbag after seeing it on digital or social media. So TikTok shop, something that we realize we need to start to actually focus in on this and start to really see how big this is getting. In fourth quarter alone, it represented $6.5 billion. There were over 400 unique shops that sell product on this marketplace. All right. And you can see that while it's all so small on the bottom there, it's only, that $7 billion compared to stores, which is 450. I want to take you back 16 years ago when e-commerce was a 4% business compared to total retail. Today, in some areas like technology, it's 50% of the business. In accessories, it hovers around 38 to 40% of the business. So think about how quickly something can grow in today's environment. This will likely grow even more at a more rapid pace. When we look at what the most popular items bought on TikTok shops are, the categories that take the lead are beauty and personal care, number one, and women's intimate apparel, number two. Look where fashion accessories comes in. Comes in around sixth or seventh. I think it's seventh. 2, 4, 6, 7. Yeah, fashion accessories. Is right there listed on the seventh. All right. In footwear, how did TikTok do? Well, 4.8 million units. Pretty sizable business when you think about how that's shaped up. Heavily weighted towards women's shoes. Absolutely, yes. And the holiday shopping period. Look at that, those pink bars in the middle there. That's, on the post-Thanksgiving, I should say that's Black Friday and Cyber Monday week. Let's put it that way. All right, let's shift to the lifestyle of GLP-1 quickly for a second. I don't want to spend too much time on it, but I want you to realize how big and important it's going to be. 80% of consumers basically expect that if they're on GLP-1, they're going to have to update their wardrobe. What does that mean? That means that if you are a size 26 and you now said, okay, my goal is to be a size 14, you don't go from a 26 to a 14 overnight. You're going to have to gradually update your wardrobe. If I'm updating my wardrobe, it also gives me an opportunity to update my accessories. It gives me an opportunity to update many other things as well. So this is a transitional period that represents an opportunity outside of the pharmaceutical side. And what are people going to do in relationship to this new focus towards better lifestyle and healthier lifestyle? Exercise, number one. Eating healthy, number two. Number four, wearing comfortable clothes. All right. Shoes and other items. So you get the idea of what I'm referring to. There's so many opportunities here to tap into this. New Year's resolutions, I'm not going to go through this, but this is really about recognizing every generation had a different configuration. There isn't one that duplicated the other. So some are talking about organization, some are talking about health and diet, some are prioritizing lifestyle, right? So it really depends on your market, and it depends on how do you market to your different markets within your market. So age makes a difference. Some of you may have heard me talk about anti-aging skincare selling to the younger generation versus the more experienced generation. Same product, different message. So you have an opportunity to sell the same product to different generations, but you've got to have different messages because number one, they speak a different language. Number two, they're using the product differently. Okay. So what do you, I'm going to ask you guys a question. You can answer this to yourself and see if you get the answer right. What was the top selling category in toys for 2025? Was it dolls? Almost always is. Trading cards, drones, or toy building sets? I'll give you a second to think about it. Make a mental note of what you think the answer is, and I'll get to the answer in a minute. Okay, holiday. How did holiday do this year? Very important to recognize holiday 25 because it's going to feel an awful lot like holiday 26, depending on economic conditions, but most likely things will shake out pretty similar. We had a fairly consistent holiday, fell short during a couple of the peak periods slightly, and the shift in the week towards the back end moved Super Saturday from one week to another week. We saw a little bit of a shift there. All right. So overall, we kept hearing how great holiday was in the media, record-setting traffic and number, retailers were reporting. I haven't had one meeting with one retailer tell me that they had a great holiday period. Not one. All right. They had okay to a little bit of a challenge, but holiday fared all right. It came in at within our range that we had projected way back in August of negative 0.5% to up 1.5%, came right in the middle of that, relatively flat. When you look at what fared well, Prestige Beauty was the, again, darling child of the holiday business. Toys did well with a last minute surge. Accessories fared well, but a lot of that was cold weather related, so good job there. But we sold out of so much of it, we didn't have much left over after holiday. So here's the answer to the question. What fared best for holiday in the toy business? If you said toy building sets like Lego, you got the answer right. All right, but the moral of the story is look at the right-hand side. Much of this is practical gifts. Printers, prestige hair, handbags did well. Fragrances, fashion footwear did okay. Look at then there's the video games things, but there are things like auto accessories on this list. Car, batteries, tires, and antifreeze fluids. Consumers were buying gifts of practical nature. Very different holiday than what we've seen in years past. Real quickly, promotion week. Promotion week is, think of Amazon Prime Days, Target has Circle Week, Walmart has Deal Days, Best Buy has their promotion week at the same period, and they all do it to compete with each other for value for the consumer, giving them a discount. They do two of them. There's the July one that's supposed to jumpstart back to school, and the October one happens mid-October. That's to jumpstart holiday. Well, we saw a very big fundamental change this year. Number one, it didn't really grow, even though we keep always hearing about how great it did. I mean, I'm amazed that the stories that hit the media are always about how great, and then when reality hits, the numbers don't show that, but you never really hear the reality side of the story. Okay. So we sold less units, that's the orange, and we sold a little less dollars. The areas that fared well, toys did well, beauty did well. But the story that I really want to share with you is this. There was a fundamental change in what happened in the focus of promotion week. Most of the big retailers that did this got focused on essentials, everyday products, not general merchandise, not fashion. They didn't focus on back to school in the spring promotion. And in the fall promotion, they didn't focus on holiday. They focused on food and electronic accessories. They focused on tech product. They focused on cleaning supplies. So when you look at CPG, the purple bars in the middle, they got growth. They were never even in the mix in previous years. Food and beverage did better. The general merchandise actually slid back, the lack of focus. So, what I'm getting at here, folks, is if you're involved in this or want to get involved in this, it's the perfect opportunity because this is going to continue. The big competition is going to continue to focus on essentials and everyday values, whereas the opportunity to take advantage of what it was designed to do, which was jumpstart some of the fashion side of the equation, they kind of stepped away from that. So big opportunity there, and watch how that's going to change and be more focused on essentials again. All right, I get asked about Hispanic spending a lot, so I figured I would put it in here for you guys that focus in on some of the regional selling. The Hispanic consumer is an important part of the accessory market in a big way. You can see Hispanic spending is pulling back, not only in the fashion side and general merchandise, but we're now starting to see it happen and pull back in the other areas across the board. So for a while, food service was enjoying Hispanics eating out more. Well, now even there, it's pulling back. So this is now getting to be a bigger gap than we've seen in previous time periods. Important part to keep an eye on. There's some new numbers that just came out yesterday about how consumer debt is now at an all-time high. Absolutely true. We've been tracking it, watching it. You can see the numbers going up when you look at it by age. It's even gotten greater. The reason why I bring it up is because this is one of the challenges we have in January and February is that when credit is maxed out during holiday, we begin to see the consumer run out of money and have to pay down their debt before they can go out and spend again. That's where we're at right now. And it's in particularly high with the younger consumer that is hard pressed for the job market and hard pressed for the spending power and the disproportionate amount of expense to income on some of the everyday essentials. I haven't talked about tariffs yet, and I'm not going to spend a lot of time on it, but I do want to share with you the impact of it. There was just based on retail sales, the fact that general merchandise was relatively flat, food was up 3, CPG was up 2, shows that tariffs didn't have as big an impact on spending as everybody thought it would. However, there are areas where price has changed. And when we look at subcategories within the different industries, this chart shows you 4-month period of April compared to the number in September. So what you're looking at is the pink bar represents 25, the purple bar represents last year's 24, the previous year. This is the elevation in average price within a subcategory of that time period, where if you just looked at the product in September and you compared it to the same subcategory a year ago, you would see the difference. So, what are we talking about? Look at something like housewares. Prices are 66 points higher than what it was the previous same period a year ago. All right? And when you go across the board, you can see accessories, well, they elevated 17%. So is price inflation a big story? Yes, it is. But the consumer has absorbed some of it. Most of it has been absorbed by retailers and manufacturers. So the consumer is willing to pay more money for what's going on in relationship to the process. Okay. So price increases certainly are a part of the story and will continue to do so. I mentioned earlier about the timing of some of these things. We are just now starting to see some industries take on some of this price increases. So, for example, in the small appliance business, they were able to bring in a lot of product pre-tariff. They brought it in, they stored it, they stocked it, whatever they had to do to get it before the tariff elevation. And as the holiday cycled through, they're now just delivering some of those things. So we're starting to see even industries that didn't have elevated prices starting to get those elevated prices. In apparel, they took price early, couldn't sell it, so they brought price back down and promoted in some cases. But now with new receipts, they're bringing it in at a higher price again. So you can see apparel elevated. Accessories, similar story. We're starting to see some of this new product come in at higher prices. So which group do you think had the bigger challenge for spending? The 18 to 24 or the experienced consumer, which is that 55 plus crowd? Think about the fact that we've got an elevated level of costs at these essential levels, and that might give you a hint. Well, if you said the younger consumer, you would be right. Similar to that debt track that we saw, similar to the income track that I showed you, there is a sizable drop off. And you'll notice in November it dropped again, and in January it took a big drop. This is a very dramatic drop. We don't normally see this kind of drop off. You usually see it slowly, decline. Very important. If you're marketing to the younger consumer, you've got to work doubly hard at getting them to be able to reach into the pocket and spend on some of those categories. When we look at the handbag business, a little bit skewed towards that middle-aged consumer, the 45 to 54, spending a higher level of growth, and the 55 plus crowd, a little bit behind it in growth rate, but still selling their lion's share. So that 36% is the biggest percentage. So the majority of product is going and sold to that 55 plus crowd. In footwear, take a look at what's happening here. Footwear is the opposite story. This is about supplying the essentials for kids, 13 to 17-year-olds. That's where the wearer got a lot of the spend. So whether it was the parent buying for the kids or kids spending some of the parent money or their own money, however it worked out, look at what's happening in relationship to that. This is all about demand-driven growth. They needed it. They outgrow the sizes. All right. So let's wrap this up and put it in a nice little package for you. What are the big opportunities that are out there? Well, I mentioned value, and I mentioned value is not the lowest price. Consumers are willing to pay more for a product if the value and the durability and the diversification of usage is there. I can buy a $10 blender, go out and buy a new one every year, and at the end of 10 years, I'll have spent $100. Or I could go out and buy a $100 blender, buy one of them, and it'll last me 10 years. Consumer today would rather buy the one and willing to buy more, but you've got to help convince them that this is the right reason to buy this product. The other thing I mentioned was pricing and the vulnerability of your competition. Be smart about it, figure out how to navigate it and get ahead of it. Socialization, absolutely, job number one when it comes to the marketing side of your business. You've got to express the newness, the excitement, why this is the right product. The other thing is, I talked about the widening of the aperture to the age sector. And the other big thing is convenience. Consumers will, if I'm offered the same opportunity to buy a product in one location or one site versus another, Those that are going to deliver it to me either more seamlessly or quicker are going to get the business. And I'll even pay a little bit more for it if I can get it in a day or two, even if I don't need it for a week. I want it and I want it as quickly as I can get it. So convenience and timeliness plays a huge role. And the last one on this slide is really about recognizing innovation is what's going to drive growth. The basics, they're going to maintain your business, keep feeding the basics, and yeah, you'll do replenishment business. But it's the innovation that is so critical and so important. So, what I want, this was the slide I shared with you at the beginning, but here's why I say innovation is so important. Take a look at this. This is looking at general merchandise, excluding apparel and footwear. Take that out of the equation. And what this does is it lets you look at new products that are sold this year versus last year. What has happened is we have gotten even below the peak COVID period. Now, remember, during COVID, we were scrambling to get product. We were scrambling just to make the basics so that we could get anything put into the pipeline so that stores could have product. New and exciting product was completely void during COVID. It actually hurt sales because there was nothing new and exciting. We are at that same point, folks. I cannot stress enough how important it is to create newness and excitement for the consumer, and your brand must be at the forefront of it. Is it riskier? Yes. Is it more rewarding? Absolutely, yes. Retailers and brands must partner together in getting new and exciting product. We have basically bored the consumer to death when the same top three classifications of items are the top sellers for holiday in 2025, 2024, and 2023. You're not going to tell me we've bored them to death. How many more portable beverage containers can we buy? We're only buying more because, well, our kids lose them, or we feel like this one's old and obsolete, or somebody came out with a new color. All right, whatever it is. But what we've got to do is come up with ways to get the consumer to engage. This is probably the biggest challenge that we have in the fashion industry, is to keep the consumer recognizing that they've got to make an investment in newness. And that's a big part of the message for today. So, how did we do in our predictions for 25? Back in January, we put predictions out there. We said that the demand cycles were going to be all about replenishment. That's exactly what happened. We talked about the pullback in Hispanics. You saw the numbers. That's what happened. Generational track was going to absolutely show a difference in the market. That happened. E-commerce, we talked about 3P becoming bigger than what it was. That certainly happened. And the personalization part of it, that was the AI agentic part of it. It sort of happened. I wouldn't give myself a complete check on that one. That one sort of started to materialize, but hasn't come into full fashion. So predictions at the beginning of last year did pretty well. And what are the numbers for, what are predictions for this year? Well, we're talking about the progression of AI again. That we feel will kick into gear. I also am looking at social commerce really becoming paramount this year. I talked before to you about GLP phase two. I think that's going to be a big storyline. Lifestyle really getting to be even more entrenched, whether it be health and wellness, whether it be fitness, whether it be cooking, whether it be fashion centricity, all kinds of things that do DIY, the do-it-yourself lifestyle. All of these are going to be really become even more important as we go through. The mini holidays, I didn't really talk a lot about it, but I did mention it. Big opportunity there because these little pockets of growth are going to be where the growth is going to come from. And you have to absolutely capitalize on those. And those mini holidays are everything other than Black Friday and holiday period. So think of whether it be Super Bowl or whether it be Mother's Day, Father's Day, 4th of July, those kind of holidays are going to become even more important. And then the last one that I'm predicting to be a really big storyline this year is going to be that whole movement of what's going on from the different demographics between the age, the income, and the ethnicities. Those are going to be really important stories to keep an eye on. All right. So let me stop there. Give it back to you, Karen. See if you have any additional comments. Sarah, if you want to add anything, feel free. And then if you want to ask any questions.
Have amazing source of information. Anybody have any questions for Marshall? It's a quiet room.
You're sitting in those comfortable chairs.
I know everybody, we lost.
We can get a copy of that presentation.
Karen, there's a question back here.
Okay.
It's hard to see.
Sorry, I can't
Hi.
see.
Oh no, it's me, it's Shala. Hi, I work in fine jewelry and I find this one really hard to differentiate from accessories because we have such a high AOV. What's your prediction for fine jewelry and take into account the gold market and AI unemployment and everything?
So that's a very good question. And the fine jewelry business is one of the few. There are going to be two areas where the consumer is going to double down on indulgence. Number one, we saw a huge amount of investment in different collectibles over the course of the last few years. We saw a big thing with Bitcoin. That's gonna slow down a lot. The other one is going to be the automobile side of the equation. The younger consumer that had wealth was investing in their mind. They use the word investing across a multitude of different sectors. The younger consumer may step back a little bit from the fine jewelry business, but not the middle and the upper income consumer. They still are looking at the indulgence in relationship to automobile and fine jewelry. That's the two areas where they said they're going to still stay focused. They're going to navigate away from some of the others that they've done in the past. So I think you're in for an okay year. I wouldn't say it's going to be a banner year because a banner year is when you get all generations focused in on it. But it is going to come down to think about the natural progression of investing. You've got gold and silver, and then precious stones become the third one right after that. So I think you're in line for the opportunity for this to start to stay top of mind for that middle and more experienced consumer.
Anybody else? I did record the presentation and Kristen will make sure everyone gets your information after hearing Marshall. I think we really want your information. And of course, if you need anything, we're always easy to reach. So, oh, wait, one more question in the back.
Also has to do with it, jewelry as well. So I'm curious to see if the concept of the viewpoint of the consumer when they're making a purchase, right? Because obviously precious metals is being seen besides like cryptocurrencies, right? Obviously as like a hedge against, various other assets, but people are now putting their money into precious metals, see as a safer sort of investment, right? That being said, do you think or do you see a trend as well where you see like the consumer instead of looking at it from like jewelry as an aesthetic like standpoint or a viewpoint, do you see them also looking at it as like an investment viewpoint for like future down the road as well? And then also like on top of that, like kind of hard to gauge, but like retail price points, obviously you have fine jewelry, costume jewelry, and you got like in the middle of the road. So like do you see any sort of buying habits, viewpoints in terms of how their perception, how they're perceiving jewelry now, in terms of why they're buying it? Curious about that.
When we had the full range of consumers looking at jewelry as an investment, that was a good banner year. When we lose some of the market, it becomes challenging. Consumers this year are going to be looking for safe havens for their money. The stock market has really made the investment in the fine jewelry business a little bit challenged on one end, but on the other end, when we're doing so well, we feel good about it. It's easy to take the money out and go buy jewelry and make that investment. So the good news is that if the market flattens out which doesn't look like it's going to go down. I mean, it looks like 26 will be better than 25. We're getting used to a lot of the noise that's been going on, the distractions that occurred. I actually think the answer to your question is the investment in the fine jewelry side of the equation is going to get better. I think when it comes to price points, you've got an interesting dynamic because you've got lab grown versus organic, and you've got different entry points. So the consumer's looking at this and having to make decisions on how do we navigate this and what's right and what's wrong. So I think you've got to really work hard at helping them recognize that there is differences between products, differences between the investment strategies. So, and that's one side of it. But I would venture to say the majority of some of the better jewelry and better accessory businesses have been a way to splurge for oneself, buying it, either getting it as a gift, but that remember the person who's buying it as a gift is usually choosing it as the gift for themselves, even though somebody else is paying for it, right? I certainly know in my household, I'm not coming home with a necklace that she hasn't seen yet because she's going to tell she's giving me the heads up on, oh, that I love this, whether it's through a photo or some other comment or whatever, right? But I'm being influenced on the purchase. So the point I'm getting at is that you've got to still influence the wearer, not necessarily the purchaser. And that's another piece that we tend to forget. As far as costume goes, as far as affordability goes, we saw a period of time where accessories became very tertiary. I don't think we've stayed there. I think we've come out of that. I think people are looking to accessorize to update their wardrobe rather than physically update their wardrobe, particularly if I have to invest in new sizes of apparel. I'm going to look to invest in accessories because that I can wear as I navigate through the different sizes. Remember, I was talking about GLP-1 phase two. As I went from a size 24 to a 20 to a 16 to a 12, I had to buy a new outfit. But I had to accessorize that outfit. I could now buy that one accessory and wear that for the next three updates in sizes. So I think that's a message nobody's talked about. And I think you guys have a huge opportunity to leverage.
Previous question. Do you see, as gold goes up, there's viewpoints of it hitting even $7,000, right? Do you think that's also going to shift in terms of like the precious metal? People, in terms of like obviously gold's not going to be as attainable for a lot of people. Do you see more people going down towards, say, like sterling silver? Do you see the volume of that increasing as a result of that being more attainable?
Yes, absolutely yes. Yeah. The demand is still going to be there. And now you're going to have to be able to recognize where's the supply going to offer it to come from. So yes.
Stephen, did you?
I might be wrong, but I think you passed a slide that talked about selling out of product versus always being in stock. I don't know if that was something like, do you see a shift in how the retailers are thinking about their inventories and stock? You mentioned early on, again, the timing of when the consumer wants it. Can you talk to that a little more?
Sure. Uh, the retailer in 2025 learned that the philosophy of selling out rather than selling off was a very important part of their margin. What does that mean? That means that they would be better off buying what they think they can sell and not 10% more and chase the business. They would be better off buying what they think they can sell out of it, and then try to sell something else if they didn't have it. Or utilize digital to be able to make the sale if they didn't have it physically in the store. So what you're seeing is less inventory in stores, more reliance and more efficiency of digital in completing the transaction. That's number one. Number two, retailers in the past, if I sold 100 watches of that one particular model, and now I wanted a reorder, I would go and reorder another 24 items. That's not what they're looking to do. What they're now looking to do is, and here's why. If I bought another 24 and I only sold another six, I now have 18 that I got to mark down. They would rather have a clean 100 sold at full margin than have to mark down those 18 or navigate it back to the vendor. Because holding on to inventory that's not selling actually costs the retailers money, even if they can return it. Doesn't make a difference. That's a lost sale. It's not, it's you can't pay the electric bill on holding inventory, right? So my point is retailers have learned it's better to sell out than sell off or exit the merchandise.